Have you ever thought about why the price of XRP can go through the roof or fall quickly? It's not just a coincidence, though. Big names in the market are in charge behind the scenes. These big players can change the price of XRP, the number of trades, and the way the market acts overall. They range from large investors to the company that made XRP. But just how do they do it? What does it mean for you as an investor? And this movie will show you the big players' plans and how they keep the XRP market under their control in ways that most people don't even notice. Keep reading because this could change how you think about your XRP investments after you read it. It's no surprise that XRP is one of the most well-known cryptocurrency. It is not just one more digital coin. We made it to help people in the real world. Ripple's network is powered by XRP. Its goal is to make international payments faster and cheaper than with regular banks. The technology behind XRP is made to be quick, scalable, and effective. Big players are interested in it because of this. People are interested in Ripple for more than just its purpose. Institutional investors are very interested in XRP because of its volatile price, big market cap, and important role as a bridge currency in the financial system. Large financial firms, hedge funds, and even banks are interested in XRP because its price changes can lead to big profits. To sum up, XRP is more than just a coin. It's something that big people can use to make a lot of money. Because of these things, XRP is appealing to both small buyers and big players who hold large amounts of the coin. And because they have so much power, they can change the market in ways that regular buyers don't always understand or can't predict. This is why it's very important to understand how these big players work and how they might affect the price of XRP. There are a few main groups that really have a lot of power in the XRP market. First, let us take a look at big buyers. Hedge funds, venture capital companies, and large banks with billions of dollars to spend are on this list. They can buy or sell a lot of XRP, which changes the price right away. Due to their large amounts of money, even one big trade can cause big changes in prices, sending shockwaves through the market. The company that made XRP is next. A big chunk of the XRP stock is held by Ripple, which gives them a lot of power. Ripple has always said that its goal is to create a global payments network. However, because they hold so much XRP, they can change the market whenever they decide to release or hold back XRP. Ripple has put some of its XRP in an escrow account to keep it safe, but once that XRP is unlocked, it can enter the market, and based on how it's bought or sold, could cause price change. Because of this, Ripple's choices about how to handle their funds can have a direct effect on XRP. There are also people who make the market. Big changes in the price of XRP are caused by centralized platforms such as Binance, Coinbase, and Kraken. They decide how liquid XRP is or how easy it is to buy or sell without making the price change a lot. On these exchanges, people called market makers can set the price within certain bands or cause big price changes by bringing more or less money into or out of the market. The players listed above can change the price of XRP every day because so many trades happen on these sites. All of these groups have an effect on the XRP market, and when they all work together, the price can change a lot. Institutional investors, Ripple, and the platforms all have a lot of power, which makes the market one where a few players can often have a big impact on the price of XRP. They have more power than most private investors because of this, which you need to know if you want to do well in the market. So how do these big players change the price of XRP? One clear way is through whale movements, which are big buy or sell orders from people with a lot of XRP. By moving huge amounts of XRP in and out of the market, these whales can make prices changed by a lot. For instance, when a big investor decides to buy a lot of it, it can quickly cause a buying frenzy, making the price go up. On the other hand, the price can drop sharply when they sell off big amounts. Most of the time, these moves are so big that small buyers feel them even if they aren't directly involved in the deal. Controlling the flow of money is another strategy used by big players. There's a lot of market liquidity held by the big platforms and market makers. This means that they can control how easy it is to buy or sell XRP. by changing how much XRP is available on their sites. They can make prices stay stable or change a lot when they don't need to. They can make it harder for normal investors to buy XRP, for example, by taking money out of the market. This could cause the price to drop. On the other hand, more liquidity could lead to more buying, which would drive the price up. But these changes are usually small, but they can have a big effect on the price of XRP over time. There's also something called pump and dump schemes that can happen, especially when markets aren't as clear. In this case, big players or well-coordinated groups could use hype, fake news, or large buy orders to intentionally drive up the price of XRP. As more small investors buy in as the price rises, the big players sell off their shares to cash in on the higher price. This leaves smaller investors with overpriced. In traditional markets, this kind of manipulation is against the law, but in the world of crypto, it can be harder to spot, especially since crypto regulations are still fairly new. These tactics aren't always easy to spot, but they're a big part of how the big players in the XRP market run things. These strategies can help you avoid making the mistakes that people with the power to move markets do by teaching you about them. The price of XRP is largely determined by the actions of these players, such as whales who make big deals and market makers who control the flow of money. Let's talk about what part Ripple plays in all of this. Ripple, the company that makes XRP, has a huge impact on the market. A very large amount of XRP is held by Ripple, which is a big deal. In fact, Ripple shares have had a big impact on the price of XRP over the years. The escrow method is one of the most important ways that Ripple controls the flow of XRP. Ripple put a lot of XRP into a trust account so that it can't all come out at once and flood the market. It was planned for this method to release a certain amount of XRP every month, making sure there is a steady supply and keeping the market from getting too much XRP at any given time. This keeps Ripple from having to deal with the big price drops that could happen if they released a lot of XRP all at once. If Ripple releases a lot of XRP at once, or if the market is already very risky, this is not normally the case. Ripple's business deals and relationships have a big effect on the market as well, not just the escrow. Major banks and other financial institutions have agreed to work with Ripple. All over the world, banks and payment service companies, a lot of people want to buy XRP when Ripple announces a new relationship or deal with a big name in the financial world. The goal of these partnerships is to use XRP for real-time payments across borders. This could help XRP become more widely used in the world's banking system. Because of this, every new deal can make the price go up, because buyers see Ripple's growing power as a sign of its long-term worth. But there's more to this than meets the eye. Ripple sometimes sells XRP. Ripple has mostly kept its sales quiet, but there have been times when it's sold big chunks of XRP to big buyers or used them to make deals with other companies. The market can be affected by these sales because they increase the supply of XRP. This could cause the price to drop, especially if buyers think that Ripple is trying to get rid of the cryptocurrency.